Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Eily. She's a Global Metals and Mining Equity Analyst with Bloomberg Intelligence to discuss factors that are supporting the gold market. Eily, thanks for joining us. Welcome to Trade Talks. And tell us what Bloomberg Intelligence is seeing that's currently supporting gold prices.
The support for gold price, we believe, is likely to come mainly from uncertainty about the coronavirus pandemic and its impact on global economic growth. We see geopolitical troubles, currency uncertainties amid a low to negative interest rate environment with an expanding global money supply to add shine to the metal. We think all these factors combined may also increase the metal's safe haven appeal as an insurance asset during the health crisis.
Let's talk about the gold market impact from the COVID-19 pandemic.
In terms of demand, we believe gold may be the least of the precious metals affected by COVID-19, with around 43% of global share risk exposure, compared with over 70% for silver, platinum, and palladium. This is based on our analysis, where we calculated that at least 65% of the world's population is in full and partial lockdowns. We believe strong gold buying is likely to come from investors, but jewelry and industrial demand losses may reflect pandemic-led supply chain disruptions. We may see upside risk on gold prices as gold supply woes may stay in 2020 on all grade dips and supply issues, including virus closures.
How do you think gold pricing will perform during 2020?
In our recent Bloomberg Intelligence survey, gold is voted to be 2020's best performing metal, according to the majority of our respondents. The majority also sees gold to be trading around $1,650 to $1,849 an ounce by the end of this year. This compares with today's price of $1,705, which is nearly up 31% year over year. Gold is strongest in January and August, and that's based on our seasonality study, with an average 2 to 4% price bound sequentially, but down 2% in May over a 3-year period. We think more worldwide stimulus measures to calm market jitters and support the economies, especially China, gold's largest market, could be positive for the metal and spur higher investment demand, derailing gold's historical price patterns. The global economic growth risks driven by the coronavirus epidemic could return gold, even as an asset that offers no coupon or dividends, to its podium as a safe haven asset, which likely to have an impact beyond 2020. We see investors, at least in the short term, may put their trust in the metal as insurance against heightened uncertainty.
Do you think with the COVID-19 crisis, we could see a new high for gold prices soon?
Well, the search for safe havens amid the global virus scare should spur demand for gold as an alternative insurance asset, helping drive a year-over-year price recovery. So we will see better demand fundamentals for gold, and this is likely sparked by stronger investment demand as the global economic uncertainty persists. At Bloomberg Intelligence, we have identified 8 elements likely to drive stronger price momentum for gold, especially as a refuge in times of crisis. These include the use of gold ETFs as a refuge in times of global financial or geopolitical crisis, dollar weakness, inflation, and low or negative interest rates. Also on the list is increasing demand from China and India, weak confidence in financial markets, greater global gold consumption, and higher net bank purchases. Gold peaked at $1,921 an ounce in 2011 when the asset met all 8 criteria. But the metal is a versatile, multi-purpose and multi-focus asset for buyers, including investors, which we believe really makes it challenging for the market to predict demand and a price outlook for gold.
Okay, Eily, thank you so much for joining us on Trade Talks.
Thank you.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.